So here's a thought process of if you're looking to get long, everybody has a step one in their progression, whether they know it or not. Step one is, are you bullish or bearish? Sometimes you're neither, and you're sitting on the sidelines, and that's fine. Bullish, you think price is going to go up. Bearish, you think price is going to go down. Your second step would be like an area you think it's going to find support and launch back up, or an area you think will find resistance and head back south. And that would be your support resistance. Sometimes you're thinking of a breakout trade where at the top of this range, we get above it, they're going to break out. So with the style of trading where you're bullish because of this rally that you see in here, and you're looking to buy a pullback because you're anticipating to get some chart pattern that looks like this dotted line and a continuation of this rally, right? So now you put yourself in a position to qualify an area, find the area, but qualify it. We get two of our blue triangles, which is reading order flow for us by showing where buy imbalances are coming in of people who want to buy it versus people who want to sell it. Not people who bought it yet or sold it yet, but people who want to buy it. That's going to always be more important in influencing the direction of price. So you get a couple of those in, and let's say that gets you long. What's most important is when we come back down to this area, boom, it's validating that there is some buying down here that they're defending, all right, or looking to buy. And so maybe these two didn't get you in. This third one kind of was the qualifier confirming these two. But here's what's important. What's going to get you confident is more objectivity. A lot of people, when I ask the question, if you knew that your losers would be kind of small, wouldn't that help you take trades in the future and build your confidence? If you knew all your trades that were losers, the ones that were going to be losers, were small and controllable, wouldn't that give you confidence and not worry about missing trades and not worry about taking trades and not worry about any of that, questioning and second guessing yourself? Of course it would. So whether these three triangles get you in or not, if you're long in this particular sequence, you now have an objective kind of area that you don't want to be long below, which is this yellow line, because that's where the buyers are showing you they're coming in to defend price. And that's objective because finally you could take all the numbers on a dome, which are a lot of these numbers right here we put on there, all the numbers in a footprint, which are all these numbers in here, and start to find the ones that are important, the areas that are important, and paint them on the chart. And once you're able to do that, people talk about reading order flow is what they've been missing. And when they stumble upon order flow and reading order flow, they go down that path. And oftentimes it's a rabbit hole because it could go a lot of different directions. And you want to make it logical. And oftentimes it's hard to make it logical. So people are right when they say that's a missing piece to their skill set. But it's hard to find, what is order flow? How do you read it? And it's really important to break it down and understand the orders that are important to influence price, because that's what we're doing. We're trying to find tools and areas that are going to influence price, the dynamic that's going to influence price over the next 5 seconds, 5 minutes, 5 hours, whatever. Because we're in the business as detectives to try to predict where price is going to go next. You could use some of the past, but the present's going to be where your most invaluable information is.